Well, hello everyone. As many know, the Fed recently cut short-term rates with speculation about additional rate cuts this year. So what does that actually mean for mortgage interest rates? And is now a good time to buy? Well, we're about to find out. We're going to ask the expert. I'm joined today by David Ratty, the Ratty Lending Team at Envoy Mortgage, and he's here to talk about what these mortgage rates are doing right now.
So great news, and it's the top of everybody's mind is the Fed rate cut. So important thing to understand is the Fed rate cut manipulates the shortest of short-term rates, and mortgages are the longest of long-term rates. So it's not necessarily a direct impact, but the good news is, if we look back 6-9 months ago, mortgage rates are awesome. They are low, right? Relatively speaking, take out the COVID years, mortgage rates are low. As a matter of fact, if you're looking at a $400,000 mortgage from 6 to 9 months ago at around 7%, now we're in the sixes, you're looking at an improvement of roughly over $250, $263 a month, which is over $3,000 a year savings from where you were 6 to 9 months ago.
Yep, and that's a big number. So I know a lot of buyers have been sitting on the fence. I think right now, and David will probably agree, we've got a window buyer. So, if you're looking to save some money from where we were last year, now is the time. Because I think I keep hearing buyers saying, well, are they going to go lower? They're going to go lower. I keep hearing about these Fed rate cuts. So potentially, David, what could happen?
Keeping in mind what I mentioned earlier about the shortest of short-term rates, credit cards, car loans, that's what the Fed is manipulating. If they do have more cuts, and it does heat up the economy and causes a concern for inflation. In other words, increasing prices because demand has increased due to this. That actually could have a negative impact on mortgage rates. So the Fed rate cuts don't necessarily have a direct correlation to what's going on with mortgage rates. So just be aware that if the economy does heat up, and demand does increase, that's not necessarily good for mortgage rates.
And that's a perfect point. So buyers, if you're thinking about it, or if you were in the market before and took a break, now is a good time to come out. The window is open. We've got a little bit more inventory. The payments feel a lot better with these lower rates. So don't keep waiting is the bottom line. So if you would like to get pre-approved for a mortgage or have any mortgage related questions, please reach out to David. His contact information is on the screen. And of course, if you have any real estate related questions, feel free to reach out to me as well. So we always appreciate you tuning in. If you know anybody who can benefit from hearing this information, please share it because it's really timely right now. So thanks for tuning in, and we look forward to seeing you next time.